Okay, good. We should be on air now. We should have sound as well. We have Basa the second. Thank you so much for letting me know about the audio. Good. So, guys, welcome to today's market update. Today is May Day, so it's Labor Day, as it's also called. And most of Europe is closed. The UK is not closed. We're gonna be closed. I think it's on May 8th. So that's when we're gonna be closed, and the rest of Europe is gonna be open. So it's a bit quiet today, but we're definitely having some moves, especially in the stock markets. I do think because of the holidays in Europe, you saw quite a lot of profit taking yesterday, and that continued today. Okay, good. So I can see we have quite a lot of people in chat box. We have Maurizio, we have Nikos, we have Stefan, and we also have Basa the second and Liz. And again, Basa, thank you so much for letting me know about the audio, and happy Friday to you guys. All right, so let's begin, and we're going to begin by taking a look at the currency markets. So yesterday was the not federal, there was the ECB rate meeting, and the ECB didn't really deliver too much of a surprise. Currency wise, we did push above 108.97. We did push above this level, and we're going upwards. Obviously, some of the measures they did yesterday to try to make borrowing cheaper is positive for the European banks and the whole European economic system, and I think that's really what's happening here. So having a bit of a push to the upside, we took out this level and we went a little bit higher as I was hoping for, but it's still a difficult situation with the currency markets because this is like a big mountain or whatever we want to call it that's overshadowing the price action here, and people are paying still attention to this moves here. So I think we should definitely be careful, and I wouldn't trade today. Maybe next week if we push up today and then maybe go down, we can maybe buy a dip, but I'm still a bit cautious because look at this. You have the break here. You remember we had that break, and then I said well, I was already bearish, but I said look to be continued for this to go lower, but this whole thing proved to be a false move, right? So we're in that situation, and it's not just the euro. If you look at something like the dollar Swiss C, it's not going anywhere. You know, it's exactly like the euro USD effectively. If you look at other stuff as well, GPUSD, there's not too much activity here either. So in this pair, I was looking for potentially a right shoulder here. So we would have a right shoulder, left shoulder, and a head, and then break to the neckline. But that never happened. And we didn't either go low enough to be able to buy a dip and then target the upside. Instead, what happened here is that the market just went up. And if we look at this today, we have created the beginning of an ascending triangle. The market, you can barely see it, but it did spike all the way up to the high. And we could potentially, what would be really good actually, if the market did go down to maybe 123, 124.30 or something, and then went up. So when we take out these levels, we can work with this profit target, which is move towards 130.48. So we have the difference here because the market, it goes from sort of being really active to being really quiet. So for example, last year, sorry, not last year, but if you look at here, it's not the best of examples, but if you look here, so you had from January, you had choppy conditions, and then when the finally market started to move, it moved a lot. And it's the same situation here. We're trading sideways for now, and in fact I would like it to trade sideways for slightly longer, for maybe another 2 weeks, and then we take out the high, because I think that's going to give us some better opportunities. So what can I say for trading the short term then, or you know, you just want to have a view? Well, we do have a bit of that bullish uptrend. Maybe we'll come down a little bit, then maybe we'll go back up again, but I wouldn't allocate any money to this one right now. Let it trade sideways for a bit longer, and then we can maybe work with the breakout. All right, this is the dollar versus the Japanese yen. So dollar versus the Japanese yen moved lower, as you know, and then triggered the break here. So if we just remove this, you can see we had a break to the downside. Usually when you break to the downside, you continue to go lower, but for now it's really struggled. But we continue to be bearish below the trend defining level, and we're now very close to the entry levels here, so maybe it'll go down a little bit. That would be good. And for now, there's no real change to the outlook here. Let's talk a bit about gold. So gold, so we've been waiting for this to come down to 1691 or to a buy area. So a few days ago we said, like on April 21st, we said look to buy here for this to go up. It did go up, and then we said look for it to come down. It didn't reach my first buy spot, and then I had to push it back up, and eventually yesterday we reached the buy spot. So this was on the 30th of April, and the idea to buy on a dip was already on the 23rd. So it took about 7 days before the market went to the actual buy spot. Now when this happened though, we went straight through the levels here, which is not really great. And of course, if you did buy here at the entry, it's not really great. But maybe here, if one is not in the position, one can look at this, because man, you can risk a little bit, maybe 0.5% or something. And if it goes up, you make 1.5%. Almost. If you go all the way up there, you will make 1.5%. It will do like that if one would risk 0.5%. So it really depends on what you want to do. But yeah, short-term bullish for now. Is it the best of setups? No. But again, the trend is bullish. Let's talk about crude. So crude oil stopped turning short-term bearish. So this is crude, and the market traded above the high here. So the idea was just to sell here. We got the sell here, down here, we got that perfect. Here, the market continues just to move against us and trade above the high. This could be the beginning of something, beginning of a reversal, but I'm a bit cautious. We still have so much resistance over here that I think we can still, I would definitely not buy here. I still think we can maybe go down. You can have a bit of a bullish bias. Maybe we'll go down and then go up again, but I wouldn't do too much today. Maybe we're just in some sort of channel like that, and maybe we'll have something similar here again, where the market is right now, at least just sort of correcting or doing some sort of a wedge, but the big picture trend remains bearish. So I will be careful. Overall, you do have a bit of a higher low here, and you have a higher high. So the definition of an uptrend is that you have a higher high compared with this one, you have a higher low compared with the prior one, then you're in an uptrend. So from this point, from April 1st upwards, yes, we are in an uptrend. And if you want to treat that as an uptrend, then maybe buying at 1250 or maybe at 12 with stops below can be something. But that's probably not going to happen today. The market may just go a little bit higher. And again, this is not a good opportunity to do anything except taking a loss in case you were selling. All right, so let's talk a bit about what happened with stock markets. So the S&P 500 had its best year since, I think, 1987. Okay, best year since 1987. The best month, take that back. Best month since 1987. And then what happened is that we had a little bit of push to the upside, and in particular in European stock markets. And we had like a nice ascending triangle patterns. So the FTSE 100, I bought it, I think 3 days ago, and I booked profits yesterday. Some nice profits. I bought as well the French stock market, and I bought them, and that was good. But now what I thought yesterday was that we were going to have a nice little shallow correction. And if I remember correctly, my trend funding level was down here at 2808. But what's happened now in the S&P is that I thought it was just going to come down here and then bounce upwards, but it actually took out this level here, and that is a problem because the very short-term trend, this one here, is now over. You do have, of course, longer-term trends. I'm just drawing trend lines here. We don't used to have, actually I should not have used trend line, because then it looks like we did break that as well. So bad. Let's use normal levels like that. Okay, all right. So you have this short-term uptrend. That one failed, and we're still above my trend funding level. And if you were looking at the same setup yesterday and you had your stop loss orders, just stick with them. That's always better. It's not very good to move things around. So that little short-term failed, that little trend. So I think we hopefully we'll bounce here and just go upwards. But I suspect there's a risk we can go a bit lower. And then you have the big picture trend, and the big picture trend is like a different ball game altogether. So let's see if I can change this one. Oh, this is interesting. Didn't know I can do that. Cancel. So you have the big picture trend. We have a low here. You have a low here, and then you have this low here. That's the bigger picture trend. So when and if we take out this level, we'll probably, that will be the beginning or the continuation of the reversal, of course, but we would have that move there if we take out this level. So then what's happening here is that people that got a bit enthusiastic, they bought at the highs, they're in a bit of pressure as well because we had such a good month. I think people decided to book profits just ahead of the long weekend, and that is why we're moving down here. If you look at the DAX, can't really say too much because the DAX is closed today, but let me actually see. But just to give you an idea, the FTSE 100 right now is down with almost 2%. So if we add 2% to this one, we're gonna be down here somewhere, just at the lower end of the buy spot, and we're gonna be so close to the stop level. So we're having some severe pressure on the short-term levels, short-term trends. And you know, sometimes that happens. At the end of a trend, we need to give something back. That's just the way the market works. And if that's the case, that's the case. It's always better not to make any serious changes. The only time you can make some changes is if you had low risk to begin with. So in my case, I bought the FTSE 100, and I bought with a risk which was maybe 60% of my typical risk. So I moved things around a little bit because I have that opportunity to do that. But if I would trade with more normal risk parameters, so full risk on, then obviously it's better always just to, you know, treat the stop loss with respect. Now, if you look at beyond the short term, right? Beyond the short term, we're still dealing here with a big picture uptrend in the DAX, right? You have this, which is an important level, because here you have a different set. And the trend here, actually, by the way, the short term hasn't necessarily failed just yet. But you have this big picture, this low here, you have this low here, and then you have this low here. So obviously take this level out, and I'll probably do like that. But for now, I think if I had to start fresh, let's see what happens next week. If I had to start fresh, actually, this is interesting. Yeah, this one is being traded. This is just with a different broker that provides pricing over the weekend, or over the close day. So here, you know, being bullish down here, I think it would not be such a bad idea. Maybe this is it as well, but we're not seeing signs yet of some proper stabilization. We're seeing some stabilization, but we're not seeing proper stabilization. If you look here on the 4 hour, you can see that you have some of these candles starting to turn a bit higher, but it's not like 100% just yet. Okay, so we covered all the markets. See if you guys have any questions. So Stefan says, I added, and good morning, I have as well, you can see here John Mitchell, thanks so much for joining me this morning. And we have as well Marvin and Namit as well. And I got 2 questions here, so we're gonna answer them before I need to leave you guys. So, well, it's not a question, it's a statement. Stefan added a short on dollar CAD. So dollar CAD had a bit of definitely sort of respected this low. And you think we're gonna go down to 136? Yeah, maybe we'll go down to 136. I think that you might take some time for the sake of you. I hope it doesn't, because we're trading within this range, right? So we're trading within this range. You get yourself a double bottom now on 138.44, and we'll take this out, maybe can go a bit lower, but we're pretty much in the middle of that range, and we could easily go to 142, and maybe that's a better level to sell 140, 150, 142. That's what I think, at least. Now, is paired with trading sideways overall very good? Not according to me. I'm not a big fan of trading things that are not moving, that don't have a well-defined trend. So we got a question about the Aussie dollar by Namit. So let's take a look at that. And Aussie dollar. So the Aussie dollar remains bullish. The trend is bullish about 67.47. I've been bullish for quite some time actually. And we're having a bit of a pullback. What's quite interesting is to see that these markets are not declining as much as stock markets. I think there could be a bit of a catch up here, and I wouldn't really be buying here. Maybe go down a little bit. If you look at it from a big picture perspective, is it the time to buy and hold the Aussie dollar forever? No, I don't think so. It is, because if you look at the weekly chart, you have the low from 2015, the low from 2016. You have the low here from actually some lows here from the end of 2019. Oh, it's actually summer 2019. So what's happening now is that we're going and pushing towards these levels. But if the big picture trend is a genuine downtrend, and the way this candle looks like, it does look like it's reversing, then we'll just go up, and then we're going to come down. So you need to be a bit careful on what we're trading right now. Okay, guys, we're going to wrap things up. Don't forget you can follow me on Twitter. That's always good if you want to stay in touch with me. I do publish some content there, and that comes out there. We do also have our premium Forex trading course. You can just sign up there if you want to. It's free with an ATFX account, or you can just buy it. We also offer coaching as well if you want that extra little help to get you over any hurdles you may have. That's also for free. Alternatively, with an ATFX account, you can actually just buy the sessions. Now, usually what happens when you sign up here, you get an email that shows you steps. But if no one reaches out to you to help you, they can always reach out to me. You can reach out to me at info@investingq.com. And you can also reach out to me via Twitter. If you have any questions specifically about that, any questions by ATFX or something like that, then you can let me know. I can tell you more about what it is, what they offer, and why we are working with them. Okay, guys, have a great day, and I'll see you guys Monday, for the next market update. Stay safe out there, and have a great weekend. Thank you, and bye-bye.